Morning, Steve Free in Chicago with the morning grain comments. Well, we have a little bit of a turnaround in overnight grain prices. They started out a little bit lower and then kind of bounced higher. Outside markets, the stocks are lower, dollars higher, crude's higher, and gold is lower. The Malaysian palm oil market was down sharply, along with Chinese vegetable oil markets could weigh on soybean oil overnight. It's interesting to note that from a cash standpoint, U.S. farmer has increased cash sales after Friday's disappointing USDA report. There's also some commercial elevator movement with these bases historically high levels. And I think some of the commercials believe that China could actually come in and buy new crop under the new phase deal rather than old crop. South American weather is good in Brazil. Argentina is a little dry, but rains are forecasted for next week. We also know that yesterday weekly wheat exports were running about 14% ahead of a year ago. USDA is forecasting a 4% increase. Corn 54% behind last year, with USDA is talking about a 14% drop. And soybeans 25% ahead, and the USDA is talking about a 2% increase. Wheat market's up on, I think, two things. Number one, Egypt is actually three things. I think Egypt is tendering for wheat, probably by Eastern Europe. Number two is that the French labor strikes are beginning to slow trade domestically to the export points. And then number three, I think that the Russians came out with a new policy suggesting they're going to limit wheat exports after January 31st to 20 million metric tons. That's quite a bit below where the USDA feels they're going to export it. And this policy is trying to manage wheat exports so they don't run out domestically. We also noted that funds yesterday, there were sellers of wheat, buyers of corn, beans, and meal, and sold oil. We've got them long 36,000 wheat, short 60 corn, and long about 2,000 beans. Chinese imports in December surged 67% to 19-month highs. They also, one of the ministries announced that they may offer duty-free imports of U.S. soybeans of about 10 million metric tons in the month of October. If that happens, that would help soybean prices rally higher. We also noted that China's December pork imports rose 4 times from a year ago. They imported 375,000 tons of pork versus 95,000 tons last year. In beef arrivals, they also noted 80% increase in the month of December to 189,000 tons. Last year, arrivals were down about 80% from a year ago. So basically, China's taking a record amount of meat imports to subsidize the fact that their pork production is down due to the African swine fever. A little bit better tone. We've got maybe some business around in wheat and also in beans, and that might be supportive to the marketplace. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day.